You can either pay the coach to learn from their mistakes, or you can pay to learn from your own. But the beauty of paying a coach is the speed. Right? You don't actually have to go through those mistakes. You get to take the learnings and teachings from them because the coach has already been through those. I'm here to make sure you don't take too big of a risk or tell you how to mitigate your risk, but I'm not here to tell you don't take any, because then you ain't going to make any money, and then that doesn't sort of defeats the whole. Then you have a hobby, and that hobby involves a lot of money, and you're not getting any of it. So it doesn't make any sense to me. But once people sort of understand, okay, it's okay to take a chance, it has to be measured and underwritten. I would say it starts with a mindset thing, especially the first time you make the jump from single family to multifamily, especially anything with commercial financing or like 6 units and up. I find that you're really jumping into the big leagues when you do that. And so I find having to shift the investor out of the mindset that gets you through buying single family homes into the mindset that helps you get through a commercial transaction. I find that to be the biggest challenge.
Welcome to the Ultimate Real Estate Lifestyle Podcast. I'm your host, Guy Bouchard, and today's guest is Shawn Quigg, who is one of the partners of Cardinal Law, which is soon to be rebranded into Rook and Knight Commercial and Investor Law Firm, which we will definitely dive into. But the intention of the episode today is to talk about all things real estate law, but to really dig into what some of the challenges investors are facing these days and what some of the options are through the eyes of an active real estate investor and lawyer. Shawn, welcome to the show, buddy.
Gee, thanks so much for having me, man. It's good to be on chatting with you.
Yeah, it's very exciting. And full disclosure, this is the first time of us meeting face to face, technically, if you can call it that. We were recently in touch just last week, and we really connected. I really connected with you, and we kind of jumped into this the way that we are because of the way that you found me, and our conversation related to the sort of information and coaching and consulting that a lot of people are out there seeking, but just really having a tough time navigating through, what's real and what's not real. And, you found me, were asking me questions, and I want to talk a lot about that. So, but without sort of getting into that just yet, to give us a little background, because I don't have any preconceived notions of who you are or past history. So tell our viewers a little bit about you on the personal side and your journey to where you were and how you got to where you are.
Well, sure. I'd love to. So when I was sort of growing up, I really wanted to become a spy, which is probably not where you thought this was going. But I went to school to be a spy. I actually did get a job with the federal government in immigration enforcement, and I didn't end up becoming a spy. I got halfway through that process, didn't make it through, which is fine. But in my first year of immigration enforcement work, where I represented the minister in hearings, those hearings would decide whether someone was allowed to stay or remain in Canada.
Okay.
Or if they could be released pending their removal, that sort of thing. I lost a case, and it was a very dangerous person who was ordered released to the public awaiting his removal from Canada. The minister appealed, and I had to work really closely with the Department of Justice lawyers. And that's the first time I got this idea that maybe I should go to law school, because what they were doing was what I was doing at just a much higher level of impact. So I applied to school, I got in, but one of my friends, we were on a little vacation as I was waiting on acceptances. And he said, if you get into the University of Windsor, which is where I went, if you get in there, you should buy a house because they're so cheap. And I got into Windsor and accepted. And so that's what I did. I bought a 5-bedroom house for $133,000. And this is my journey into real estate investing, because I didn't know anything about investing in real estate. All I knew was that I was putting aside a very comfortable government job with a salary and benefits to go to law school where I have absolutely no income. And so what I did was I rented 3 of the 5 bedrooms out to other students. And within like, I don't know, 2 months, I was cash flowing, which is really important because one of the most important things that helps you get through law school is beer money.
Yeah.
And that cash flow is what got me there. And so, as I was going through school, I decided, okay, I'm liking this so much that I'm going to add a business degree to my law degree. So I did that. I'm doing business school and I'm learning about the assets of a corporation. And I learned something in that course in Finance One that was totally antithetical to everything I'd ever been taught in my life. And that was that cash is the least valuable asset of a corporation because, and we know this to be true more now than ever before, it loses its value to inflation every day. And this was mind blowing for me. I'd been taught to save. And then I started thinking, okay, well, when you go to law school, the banks just throw money at you. They throw debt at you. I had this line of credit that I wasn't using. I thought, well, it's not really losing value on inflation, but it kind of is. So why don't I take that and buy another student rental? But this time I'll buy a bigger house and I'll buy it much closer to the university. So I did that, and I actually had the thing rented out before I even owned it. The seller was a real estate agent, also an investor, owned apartment buildings, knew what I was trying to do, let me just show the place as much as I wanted. So I had the thing rented and cash flowing before I even owned it. And that was really sort of my, like, oh, this could work. I'm sure it's small, it's student rentals. Although if anyone listening has ever had a student rental, that's really a small multifamily, because they're all, everyone's
With a lot more headaches.
sort of beast, right? So then I started joining the Facebook groups and I started learning about the Burr model and I was learning about flipping. But what I saw was no one was all that happy with their real estate lawyer. And what I sort of surmised after sort of reading the complaints was that a lot of them were working with residential lawyers, people who, and there is an absolute time and place for a residential real estate lawyer. It's just not when you're buying student rentals or multifamily or working with private money, because that's really outside of the scope of that work. And so, I graduated, I got called to the bar. I had this plan to be on Bay Street. So I started there, but I kept thinking like, man, what if I could pair my profession and my interest in real estate investing? So I did that. I quit Bay Street. I went to a smaller firm that works with investors. I bought some multifamily. I bought some short-term rental. I did some flips, and I dove literally headfirst into becoming a real estate investor lawyer. And that brings us, fast forward 4 or 5 years, and here we are.
Okay, so there is a ton to unpack there. Just for context on time, when you started that journey, how long ago was that?
Well, I got called to the bar in 2019. I articled from 2019 to 2020. My articling ended basically 2 months after COVID started. Like I went home from the office on March 17th, 2020, and never returned. Wow. And articling was up in May. I quit there in August, did start at this other really small shop for a very short period, and then started in 2021 or January in the real estate investor space.
Phenomenal. And to the timing, so the 2019 was kind of around the time when you bought your first place? Are we on the...
No, first place was 2015. Second place was 2017. Yeah.
Okay, so bought your first place in 2015, which was when you were sort of going through the beginning stages of legal and business, right? Degrees. Right. And then, so 2019 was kind of, okay, you're 5 years in, you've converted into the real estate space as sort of your profession, and you've got some real estate acquisitions under your belt during that time.
Yeah. If you're going to do this, I think you should be able to actually walk the walk. Like, it's one thing to understand the terminology, but you really don't get it until you own stuff. And you have to deal with the legitimate things that occur on a day-to-day basis.
That can't be overstated. I mean, any conversation I ever have with my clients or with colleagues or friends or family, business associates, we all talk about building the power team, right? You need the power team. You need the people around you. Lawyers and accountants are obviously a big piece of that. But the number one thing that I always tell people is if they don't own real estate, they don't belong on your power team. You kind of always want to have that person already have been there, done that, so they're not learning on your behalf. So it's an interesting take, and you're actually you're the second lawyer that I've actually had on the show that sort of forged their path into the lawyer representation field due to the fact that there was a lack of good representation, or there were so many people frustrated in the process. And it's a unique path, but sounds like one that you've taken as well.
No, that's amazing.
So before we go on, a spy?
Yeah.
tell,
Yeah.
tell I need to know what got you on the path of wanting to be a spy. Like, when did that start, and
The
what happened
grade
there?
10. It was grade 10, and it was the TV show 24.
Okay.
Jack Bauer was just such a great character. And you know what Jack did in that show is not what spies do. You know, that's a drama. And that's a very dramatized thing. But the types of issues that were coming up for Jack Bauer in that show are legitimate.
Like what?
You know, we hear about thwarted terrorist attacks. We hear about geopolitics and how, you know, if you take a look at what's going on in, say, Venezuela right now, that is a geopolitical hotbed. There's a lot to know there, and you can bet everything you have that intelligence was very involved in that operation, not only in it carrying it out, but also its genesis.
Yeah, absolutely. That's crazy. And then why did you get off the path? What stopped you from wanting to continue down that path?
Well, it's a very intense hiring process to work at CSIS. The intelligence officer position, the spy position, when you apply, there's at least at the time I applied, there was a 13-stage process, and you have to pass every stage to get hired. So I got through 6 or 7 stages, which you know, was pretty good. The last one was the first interview, which I didn't make it through. But very interesting, like right out of a movie, how to even get in their office in downtown Toronto.
No
Like,
kidding.
it's a very nondescript thing. I had to answer a black telephone on a table and, you know, talk about who I was. And then I got someone came and picked me up and escorted me up. And, you know, we went on a special elevator that went to floors only if you had a certain and a code. And then there I was in CSIS's office, which was very cool. You had to go through, this was before the time of those airport scanners.
Okay.
We put your hands up like this, but
Yeah.
they had one. And so I had to go through a metal detector and a body scanner just to get into the administrative office. And then it looked like every other office you've ever been in.
You know, I'm laughing because as you're describing this, you know, obviously I'm thinking, you know, like a Jason Bourne style application
Yeah.
process of navigating the fog and being blindfolded and answering random telephones and checkpoints you don't even know. And I can't help but to think, like, isn't that exactly what, like, learning how to be a real estate investor is like? Like,
Yeah.
isn't it a very similar path of, like, you know, just trusting the next step and put your blindfold on and, you know, go through this door, and we can't tell you what's there because you just have to sort of figure it out on your own. And if you're good enough, you'll make it. And if not, you don't.
Yeah. You know, there was a lot of unknown, right? You got a little bit of guidance.
Yeah.
But you really had to tackle a lot of it on your own and figure it out. And, you know, I made it through 6 or 7 stages. So I was happy. I was disappointed with the result, obviously. But in the end, I probably wouldn't be here talking to you. So,
No, you
it was all
wouldn't.
worth it.
I mean, at the end of the day, you got to do what you're passionate about and what fills your heart.
Yeah.
But there's also a wallet aspect of it, of financial success or stability for you, your family, and that's something
Sure.
that, you know, jobs just don't cut, right? Or they just don't do. And I think you landed in a great spot in doing what you're doing and investing. But you know, too bad you didn't make it. But there's a reason you're here,
Oh,
so that's awesome.
that's right.
And I love that journey because I actually, you know, where we connected and anchoring back to what the purpose of sort of what drove this call was, helping people navigate that fog. I mean, I do see real estate like somebody who's been through that process. So you made it to, you know, stage 6 of 7 or 6 or 7 out of 13. It's kind of, you know, in the real estate journey, you know, stage 1 is like, you know, buying your first house, and stage 2 is buying your first investment, and stage 3 and 4 is scaling, and 6 or 7, I mean, that could be buying your first multifamily building. I mean, that's a far way down the stage. Now, you know, the stage 13 is like, you know, you're a billionaire flying your PJ. Well, okay, we're all trying to make it down that path.
Yeah.
But what does that path look like? And every single thing that I'm working on right now in delivering value to my clients that are navigating the multifamily investing world is to map out those 13 stages. And I'm not a billionaire flying on my PJ. So, maybe I'm at a level, 10, but it's helping
Not
everybody
yet.
that hasn't got to level 10 get to level 10 while I continue to work with people that have gotten to 13. But it's mapping out that process and that risk assessment and helping, like, it's perfect because if we can do our job of demystifying that process and laying out the steps of showing people how to get to the levels that we got to with the least amount of resistance and protecting your downside and knowing how to identify opportunities. And I think we've done our job. And what really connected me in the phone call was with you was how many people are out there promoting that they've got the path or talking about the path or giving some sort of, indication that, they've got that. But when you really drill into it, a lot of the people out there is more like the blind leading the blind, and protecting people and advising people on making sure that they take the path is really what I wanted to talk to you about today. And can you just talk a little bit about how you found me, why you reached out, and sort of what was the first thing that came to your mind before you reached out to me?
Yeah. So I came across some of your videos on the internet. And, whenever I come across someone new in this space, I take a moment to pay attention to what they're doing. Because if they're legit, I want to know them. Even just to know someone else in the industry. This is a small space. And I think it's really important for me as a professional that helps other people to know as many people as I can, because there might need to be an introduction at some point, and I need to know, the creme de la creme. I need to know who's actually doing what and well. And so I started listening to your videos. And what I got from your videos was, Guy knows what he's talking about. He's leading with value. I'm not getting sold on anything. Like, you weren't selling me on anything. Your videos are informative, which is pretty rare these days. And everything, and it's fine to sell, in my view. It's fine to sell as long as you take, especially as a coach, you take on the responsibility of actually delivering legitimate product or service, right? Whatever it, however that fits into your coaching business.
Yeah.
And so as I was listening to your videos and seeing, some pretty good stuff that I know to be true, I thought, well, I got to reach out to Guy because this is a person I need in my circle. And so that's what I did. What I appreciate about what you're building is that you're actually taking your lived experience and putting it into a usable, consumable format for people that want to get to where you are, right? If you're at stage or level 10 and someone else is at level 2, well, great. You're like handing the rope down to them and sort of telling them how to climb up. They still have to climb, but you've been there. And, when I first started with my own real estate coach and learning about how a coach can help a real estate investor, one of the things I learned, and this is sort of colloquial in the coaching space, but you can either pay the coach to learn from their mistakes, or you can pay to learn from your own. But the beauty of paying a coach is the speed. Right? You don't actually have to go through those mistakes. You get to take the learnings and teachings from them because the coach has already been through those. So, I don't know. I mean, I guarantee you've made mistakes because we all have. I don't know those mistakes, but I guarantee, and I can just tell just watching your videos, that those mistakes and the learnings are what form the basis for your education, which to me is just so critical. You also touched on some concepts that are legally sound. Now, I'm a lawyer, so I'm listening for that sort of thing. And I've seen plenty of material on the internet that is no bueno, right? Talking about raising capital and putting that out on the internet in a way that is going to get the Securities Commission of your products to go, oh, what are you doing, man? Right? Talking about raising capital like it's collecting fruit at a fruit stand, right? When you raise capital, you are a steward of someone else's money. And I was getting the impression that you understand and respect that principle. So someone who hires you is being Sherpa'd appropriately. And so that's why I reached out.
That's awesome, man, and I really appreciate what you're saying, and I appreciate the the support and the positive feedback on it because you're right. The authenticity is the only way that I can deliver, and I can even be in the space that I'm in, and being as transparent about the wins and the losses and all the paths that have got us here in this whole journey. I mean, it's no different for any quality person. It's the same as you. I mean, a big part of what you're doing on the legal side from the real estate investors corner is helping them navigate the same thing, the same fog, and looking at it from, hey, we've seen this story before, we've been there, we know what the risks are that you're going to face, or at least a good chunk of them, and putting you can either go and learn yourself and go and put whatever agreements you want in place, but if you just pay a little bit more upfront, pay time and money, you're going to prepare yourself a lot better, and in the end you're going to get a better result. And I really appreciate that about you. So for you, from the real estate, before we talk more about the sort of information and stuff, but what does being a real estate investor's lawyer mean? Because you're kind of coined as that representative, real estate investor's lawyer. That's a pretty big statement, and it's very clear, and it's niche. If I'm a
Yeah.
real estate investor, I want to be coming to somebody who knows my space. And it sounds like you do very well as well. So what does that mean to you though?
Well, good question. I am a real estate investor, and chronologically, I was an investor before I was a lawyer. Right? It took me 4 years to get the law and the business degree, and I then had to write the bar exam, and then I had to article for 10 months, and only then did I get my license. Right, but in that time, I bought 2 houses and had 2 multifamily apartment buildings under contract that ended up closing later in the year after I got licensed. But but first and foremost, I am a real estate investor. And so I've been through a lot of what most real estate investors have been through. I've been through the highs of cash flow. I've been through the highs of rent paid on time every month. I've been through the lows of, a tenant ignoring me and not paying rent. I've dealt with very clean people and very not very clean people. I have done long distance real estate investing, right? My multifamily was in New Brunswick. I live in Ontario. I self-managed for a while. I learned a ton about property management, tenant management, and trying to create systems that work when you live, 1,500 kilometers away. So what that means is, yeah, sure, I know about the law, but you've heard the saying, see the forest through the trees, right? Like that's a real thing. And in real estate investing, yeah, sure, that you can cross T's, dot I's when it comes to the legalities. But if you're not applying the context of the deal to the transaction, if you're worried about something that's worth pennies instead of something that's worth dollars, right? As a lawyer, my job is to worry about the dollars, not the pennies.
Yeah.
And understanding the context of real estate investing helps me advise people or cut through the noise and really get a solution that makes fiscal or legal sense. So that's really, the sort of the overarching piece. Of course, when you are a lawyer for investors, you are dealing with typically multifamily acquisitions, transacting title, at least in Ontario. So I'm an Ontario lawyer. At least in Ontario, it looks pretty similar no matter how big the property is. It's the lending, it's the financing that is the real difference, right?
Okay.
When you buy a single family home, and I've helped thousands of people do that, the instructions that come in from the bank are the same over and over. I have seen the same package over and over and over again. I know it very well, and it's no problem. But when you're buying a 50-unit apartment building that's financed with CMHC insured, with a CMHC insured mortgage product that has a lender, a private lender, like a Peak Hill or CMI, that has their own lawyer, that has their own documents, that has their own way of doing things, every single one of those things needs to be analyzed and eventually negotiated. Right. And there's too much money to be made for the lenders to really just like force themselves on you. It really becomes more of a conversation and a back and forth. And
Yeah.
so, being able to navigate private money, big numbers, and lots at stake, tenancies, deposit, rent deposits, that sort of thing. All of that is so much different than what a residential real estate lawyer does. And that's why I say I'm a real estate investor lawyer.
I love it, and thank you for explaining that, because our definition or someone from the outside, really needs to know what that looks like. And to your point, I think the thing that lands there the most for me is you're a real estate investor first, and then you became a lawyer, and really those two things starting to marry up over time just makes you that much more effective and that much more valuable to the people that are coming in your circle. So I would highly recommend anybody that's watching this, if they're dabbling or they're looking for support or they're looking for someone to give them the right guidance on the path that they should take, on as a prime example of the type of person that you should be contacting before making any decisions out there. So thanks for that
Thanks.
explanation, Sean. And two things sort of come up for me on where we're at, because I want to get back to what we were touching on with the information that you're seeing out there, and what sort of drew you to me, because there's another side of that. But the thing that's coming to my mind right now is what is the biggest mistake that you see investors making, like getting into the commercial multifamily space? Like it's a big jump. And just to explain to people before you answer that, when you talk about residential financing, you're talking about stuff that's under 5 units or less is typically your residential criteria, where that's a rinse and repeat lending criteria that you go through. But as soon as you jump in, which is all based on your personal income, but when you jump into commercial real estate, which is over 5 units, you're into a totally different dynamic with the lender, and legal and accounting and all of the things are start to get a little bit more complex, but they're fluid. Maybe not complex isn't the right word. Fluid is the thing, because you said something really important there, that that's not this template, copy paste, rigid document you get from the lender and it's one size fits all. You are truly in a negotiation where you're assessing that information back and seeing if it's actually good enough for you, because there's a whole variety of different options out there when you're talking about the commercial multifamily lending space. So back to my question, what do you see as one of the biggest mistakes that investors are making when jumping into into that space, when leveling up into the commercial multifamily space?
It's a good question. There's a few. I would say it starts with a mindset thing, especially the first time you make the jump from single family to multifamily, especially anything with commercial financing or like 6 units and up. I find that, you're really jumping into the big leagues when you do that, right? And whether it's a 10 unit or a 50 unit, and of course there's a big difference between those two, but you are really jumping into the big leagues. And so I find, having to shift the investor out of the mindset that gets you through buying single family homes into the mindset that helps you get through a commercial transaction.
Yeah.
I find that to be the biggest challenge, in sticking with I've got to find the cheapest interest rate, and I've got to find the cheapest lawyer, and I got to find the cheapest insurance. Like that just kills your deal. And, like the mistake is actually believing that, or letting your single family home acquisition line rule your commercial multifamily purchase, because no one wants to pay more than they need to, but at the same time, everything is different. And so, educating really helps get through that process, especially if they're working with a mortgage broker that understands the game and a real estate agent who understands the game, or if they have a coach who's helped them sort of level up and understand that this ain't going to be buying a single family home. Like there's a lot more at stake. The lender's taking more points on the fees. The lender's got their own lawyer, so they've got a bill. Your insurance is going to be, way higher than you've ever seen before. The interest rate, you're just lucky to have a loan. So
Yeah.
get used to private money. It's going to be the best tool that you've ever had once you get over the fact that it's 12 or 15 or 10 points or whatever it is. So
That's
really
right.
staying grounded in the mindset of single family home buying is the big mistake. I've also seen a number of people try and incorporate themselves. So the decision or the how to decide whether or not to incorporate is a conversation in and of itself. Right.
Yeah.
And that's a 3-party conversation outside of the investor, right? Lawyer, accountant, mortgage broker, for absolute sure. There could be other people that might help you make a good decision. But there comes a point in time where, or a certain unit count where there's absolutely no way you should be proceeding without incorporating. But here's the thing. A lot of people don't get this. The articles of incorporation, the thing that actually creates the existence of the corp, is but a very small piece of what is needed. When you incorporate and you are going to buy with a mortgage, you need a full minute book. And that minute book needs to be professionally prepared, right? It needs to show the lender a number of things for a number of reasons. Anti-money laundering legislation is one of the reasons. Regulation in terms of making sure that the lenders comply with their own regulatory requirements outside of the anti-money laundering piece. All of that has to be dialed. And they're not lending to you until you have it. So, incorporating yourself as and there's services out there that'll do it. Owner is one of them. And, that is what it is. But you will find that it's sort of penny wise, pound foolish to incorporate yourself. Yeah, you'll save a little bit, but you will cost yourself way more later when you've got to have someone rush create a minute book for you. The other thing is when you incorporate, at least in Ontario, you need to submit 2 returns every year. Everyone knows about the first, the tax return. The corporate income tax return actually must go in, and you need a good bookkeeper to make sure that you're reporting properly. But what most people don't know is that you have to file a legal return as well. And the thing about the legal return is it represents a couple of things. A, that you submitted your tax return, and B, that you've updated your minute book. Now, what a lot of people also don't know is that under the Business Corporations Act, you've got to, every year, the shareholders have to reappoint the directors, and the directors have to reelect the officers. So all of that goes in the minute book. There must be a dividend declaration, even if it's $0. You make a declaration of 0. And then you use that and a few other things to fill out the legal return, and the legal return gets submitted. A lot of people also don't know that in Ontario, if you don't file your legal return, the province could dissolve your corporation. And even more people don't know that there is a piece of legislation in Ontario that says if you are a corporation and you own property and you get dissolved, the government owns your property now. So you can incorporate a company, buy a 50 unit, forget about the legal returns, and then Doug Ford owns your 50 unit. Big problem, right? It can be undone, sure, but you're going to dump thousands of dollars in illegals just to undo something that could have been completely avoided. A lot of this all comes down to mindset, and I'm sure you've heard or read the book Who Not How, right? Understanding the concept of finding the power team to help guide you, get the things done that they know how to do for you, so you can focus on things like underwriting more 50 unit buildings.
Yeah.
Right? That's the key.
Well, and what I'm hearing and what's going through my mind at every stage of the syllables that are coming out of your mouth is we see this every day. We see people, and I get it. You're anchoring that in sort of that residential mindset of people that are used to just sort of doing those things themselves versus, call it, the commercial mindset, which is the scalable mindset or the entrepreneurial mindset of you absolutely need to understand who should be doing what and intentionally delegating that stuff off. But the cost savings is a big thing that I'm hearing. It kind of comes from it, and that I see that you're kind of nailing on, where people are going to, look at the interest rate or the private is too much, or, oh my God, the legal's that much, or, oh my God, the accounting's that much. And what I also see in that, and what I deal with every day, which is the beginning stages of my client onboarding process, is really understanding how to truly underwrite deals. And underwriting deals has all of that stuff in it if they're underwritten properly. And where I see the trap in my world, which is a big part of it, is people don't, first of all, they have no idea how to underwrite the deals that they're even putting their money into, which is, we're going to touch on that. I mean, that's a big part of what the awareness that I'm bringing to people. But that's, they underwrite a deal. If they do underwrite the deal, they're missing so much of that experience of just like getting a deal is one thing, and putting your money in to fix it up is one thing, and your down payment is one thing. But the cost of closing, the due diligence items, the environmental, the inspection, the appraisal, the legal, the accounting, all of those aspects, they just get glazed over. And I've been guilty of that on my big deals when I started. It was, you don't know what you don't know. And if someone came in and told me like, hey, make sure you have some awareness on these other 15 line items that are for sure going to cost you money, and that's just a regular course of the deal, it would have drastically changed the outcome of my return assumptions at the beginning. And then people get trapped in like, oh my God, this deal doesn't work if I spend all of that money, but we're already committed to this deal. And it's just like, it's mind blowing how many people don't know. And it's even more mind blowing hearing from you, especially on a professional level, the things that people try and do on their own, which is holy crap, man. If I even considered running my own accounting and running my own legal books, like I would be long gone by now, buried in a hole so deep that there would be no getting out of it. So
Yeah.
I think the message here is very, very clear. Doesn't matter who you talk to or what you're talking about or what deal you're getting into. Like, talk to somebody who's been through it, just to have some awareness, take you out of that mindset of, not knowing, get clarity on the things that you can expect to go through so that you can be comfortable when you're actually going through them and be financially prepared. Super,
Yeah.
super big part of it.
Those environmental bills will add up quick.
Yeah, and these things all come in phases. I mean, I can't see it on my camera right now, but I've got my whiteboard because I'm processing out the step by step, if this then that scenario of actually going through the deal. And I've got about 30 sticky notes on here, which kind of maps out the whole
Yeah.
process of going through a deal from initial due diligence, or sorry, from initial feasibility to right through to closing. And it looks fairly straightforward, but when you click on one of these sticky notes and open the playbook for these things, like, it just expands into this infinite amount of steps that people just have no idea about, not only from a time, but also the money standpoint. And that was one thing a question that came up for me is people stepping into the big leagues. Let's talk about that for a second. Stepping into the big leagues is commercial real estate in general. Now, as experienced investors know, that you have a tough time wrapping your head around at the beginning is the bigger the better. The bigger the deal, the better it is to go through it. And I'm talking about we're talking like the cost, the money you have to pay on a 10-unit deal is very similar to the money that you're going to have to pay for a 100-unit deal. All the setup is the same. All the reports are relatively the same. The structure is the same. And of course, maybe 10 to 100 is a big jump. But for the most part, that long list of due diligence items and all the things we just talked about, it's the same for any deal that you do. Raising money is easier. Getting funding is easier because there's more room in the deal. There's more ability to absorb the cost of these things. However, I want to know from you, somebody stepping into the big leagues, what would be your recommendation for somebody sort of taking that step of just get into something to kind of figure it out and sort of start small? Or is it, getting support or partnering with people potentially to go into a little bit of a bigger thing because you're already going through the process, you're already spending that time and money, and for me, it's easy because I've been there and I've done that, and we talk about scaling. But I want to know from you, your perspective of people making that jump. Like, what would be your recommendation of somebody coming to you asking, hey, how should I get into this? I'm ready, but what should I be doing?
Yeah. I mean, the very first thing that came up for me was talk to someone who's done it. And that could be your real estate agent if they've done it. It could be your coach. Hopefully they've done it.
Hopefully, we'll get back to that.
Yeah. I find that the best commercial real estate agents out there they're helping you run deal analysis, and they've seen it all. And so, the people that I work with that work with really good agents are very confident, even though I'm thinking of a client right now who has like 6 or 7 single families and then jumped straight into 15 units. And that's a big jump. That is definitely a big league jump. And he trusted, he found the team, he trusted the people he hired. Commercial real estate agent and his team did a bang up job. They did very well in preparing him, negotiating, and sort of helping him underwrite. They've got their own tool that's very comprehensive. The client, sort of put his faith in the mortgage broker, who was also really good, and our firm to help navigate the legalities. And the deal went very well. And
Awesome.
it's now cash flowing. They've turned a couple of units. They had a bunch of unused common area space that's now getting turned into yet another unit to max out the highest and best use without even a minor variance, a zoning minor variance. So that's a really good deal.
Awesome.
But that guy had guidance, right? And so whether it's a coach or an agent or people that that have done it, get them to walk you through it, get them to help you. And if you need to offer them a small slice of the deal, yeah, it's worth it, because
so worth it.
the mistakes that you can avoid by sharing the wealth, man,
It's huge.
such
It's
a good idea.
everything. I mean, and it's, the mindset for everybody watching, my perspective, the more stuff I do, the more stuff I want to pass on.
Right.
And it's really getting anchoring into how to find the right people. How can you find the people that you can trust, that do have your back, and then letting them do their thing. Like, stop getting in their way. Trust that once you verified that you can trust the info and you've gone through that experience, and there's nothing better, because then as an operator, you can focus on exactly what you're intended to do, which is make the deal work better and go get
Yeah.
more deals. Like, that's what you should be doing.
I do tell people you do have to get uncomfortable.
Oh
Like, you
yeah.
don't grow unless you get a little nervous or scared.
Yeah.
I also tell people, because I mean, I probably get an email at least once a week saying, review this and make sure I'm not at risk. I have to tell people, risk, your rate of return is a reflection of risk. Like, if you want to make money in real estate, you're taking risk. I'm here to make sure you don't take too big of a risk or tell you how to mitigate your risk, but I'm not here to tell you don't take any, because then you ain't going to make any money. And then that doesn't sort of defeats the whole, then you have a hobby, and that hobby involves a lot of money and you're not getting any of it. So it doesn't make any sense to me. But once people sort of understand, okay, it's okay to take a chance. You just it has to be measured and underwritten. And underwriting a deal itself is one thing, but sort of underwriting, even, if you get presented with a shareholders agreement or a joint venture agreement or a limited partnership and subscription agreement, right? There is risk in there for you, no matter who you are and which side of the deal you're on. But do you understand it? Are you okay with it? And how do we mitigate it? Those are the questions that you need to be asking yourself.
You're touching on exactly where I've anchored myself in the coaching side of the business, because in order for somebody to even do that, and I had what you just said, the email a week where someone's asking you, does this fit? Is this risky? What should I do? Is the exact same questions that I see being asked every day, and get asked from people in my circle and my clients of,
Yeah.
is this a good deal? And my answer is exactly what you just said. And it totally depends. Like, how am I supposed to tell you what a good deal is for you? For me to solve that for my clients, doing an intake process to really define all of those factors of what is their access to capital, what is their experience level, what are they trying to get out of the deal, in how much time are they trying to get it out, and then what role are they going to play in that intake process has a direct output of determining a deal box specific to that person's needs. And what you really said, which a lot of people don't understand, or at least maybe don't want to understand or are ignorant to, is everybody wants to make as much money as they possibly can, but with that upsized return is directly correlated to the risk that they're going to take. You want to do a deal that is going to make you $6 or 6 or 7% return on your money, a 6 or 7 cap. We're going to find a relatively safe place for you to get that, pretty much in any market. You want to start making, talking about making 20+% return or doubling your money in a couple of years. Well, buckle up because we're talking about a completely different path of uncomfortability. And
Yeah.
glad you touched on that, because it's that lack of clarity and that lack of understanding of how return is derived and how it correlates to what people are looking for that I see as the biggest gap in this entire market, which goes back to what is going to help as many people as we possibly can get that clarity. Before I answer that, or before I even talk about that, what do you recommend for someone, other than just saying, hey, go figure out what your what your return is? If someone doesn't know what that means, if they don't know how to define that, what would you recommend to somebody that is trying to navigate that and figure out what their next best move is and how to get clarity and some confidence behind that?
Well, first I start by explaining the difference, right? And the example I use is, if you're an equity investor, you could make 20, 30, 40, 50, 90, infinite cash on cash return, right? But the downside is you could lose it all. And compare that to a private lender who's going to make 10%, 12%. but they have a mortgage. That, for me, perfectly encapsulates the difference between wanting to earn a high return, but needing to take a high risk. After that, I'm pretty limited in terms of telling people, well, you should only do a deal with a 20% cash on cash. That's not my role as a lawyer.
No.
My role isn't to necessarily be a business advisor. Now, I am an advisor, and I will point people in the right direction. But in the end, it's not for me to tell you whether a 10% cash on cash or a 50% cash on cash is right. But what I would tell you is there's going to be way less deals at 50% cash on cash than there are 10. So you need to decide, like, you want to be doing deals? Do you want to be making semi? Are you hitting singles and doubles? Or are you only waiting for home runs?
Right. That's a great way to illustrate it, and I'm gonna use some of that. I say the same thing and in many different ways, but it's a great basis for understanding, and that's kind of that less than 10% return on your money. Those are pretty typical deals that you can find relatively safe investments across the board from an equity lending standpoint. That's pretty common knowledge. Everybody, well, 10% is not enough for me. Okay, well, what are you prepared to do for it? And that's a good one. It's like, are you prepared? How much money are you prepared to lose?
You probably should. I mean, if you're an equity investor, like 10%, the S&P's earned 10% every year on average for the last 100 years or 50 years. So like, you could probably just do that and do way less work and be probably safer.
Yeah, sleep better.
One of the things we learned in business school was like, well, everything sort of goes back to a treasury bond. A treasury bond at 3 points is the least risky investment you can make in the market. So you kind of got to base it from there. How much more risk do you want to take versus how much more do you want to make?
Yeah, big time. No, that's good. And this is exactly the clarity that I'm trying to help a lot of people get. Whether you've got, whether someone comes to me with no money or they come to me, with too much money, the answer is always the same. If you don't have that knowledge, if you don't have that clarity, and you don't prep yourself with the information to help you make those educated decisions, well, then what business do you have looking at deals? Like how are you going to possibly make a decision on any given deal that crosses your plate and be able to decipher, not only if it's a good deal or not, but whether it's something that you should actually be writing a check for.
That's right.
And it sounds like we're kind of anchored in the same thing there. Okay, so I want to go back to the open loop of the education and the things that you saw valuable in the information that I was giving. And a big part of everything that I'm doing is to try and educate people to have awareness, to know what questions to ask and what things they should be considering before they go making any decision, whether it's investing in themselves or investing in other people or investing in their education or any of that stuff. And you said that you were picking up good things from what I was saying and they were landing with you. It was what you sort of know, but what's the other side of that? What is some of the information and stuff that you see out there that if to everybody else might seem okay and might seem good information, but how does the average person that's navigating this world kind of pick up on maybe some of the things that they should be not listening to, or maybe be doing a little bit more research before they're just believing it?
Well, I would say the big one is raising private money, whether it's equity or debt, but especially debt. The promissory note wave is largely died down. And I'm not here to tell people to not lend on promissory notes. But I am here to say, if you're going to lend on a promissory note, you better be getting an interest rate that's reflective of the risk of having no security, because that's how it works. You're taking a bigger risk. You should be getting a better return. And a promissory note is 100% way riskier than a mortgage, which has security, which has mortgage enforcement built right into it, both contractually and statutorily. A lot of the sort of shady information I'm seeing put out there is about raising money, how it's just, go call everyone you know and get them in as a joint venture partner or as a private lender. And while yes, it's not necessarily a bad thing to call everyone you know, is pretty problematic to be a first-time investor raising millions of dollars on a deal type that you've never done before or don't have experience in, unless you have bought the experience of someone else, whether it's a mentor or a coach. And some of the coaching out there is just not that good. I know of at least two examples of coaches who became coaches after one deal. That is just not enough. There's not enough experience. And so I can't, anything that those two coaches say, I just can't give any merit to, and no one really should. No one was hiring me to do a 50-unit apartment building deal in February of 2021, 1 month into being a lawyer for investors, right? They were hiring me to do like duplexes.
Yeah.
It's different now, but that's because I've been through it. I've seen a lot of things. I've helped people do a lot of things. I've progressively built up. And it's the same with coaching. And so in my view, a coach, while maybe not having a fiduciary duty, certainly has an ethical duty to their students, both through direct coaching and through marketing and other outputs, to be really responsible what they're teaching on or what they're suggesting to do. Right? Raising capital without a proper negotiated joint venture agreement with independent legal advice on both sides, instead of just downloading a template from the internet and signing, or a proper limited partnership actually set up legitimately so that your limited partners can actually be protected, right? You want to be a good steward of their money. Incorporating a company on your own and issuing shares that don't have the right share attributes to your investors, or not issuing them shares at all, or not getting your shareholders agreement signed because that doesn't seem all that important when everyone was talking about all the vacations we're going to take with all the cash flow we're making. Like, I see all of that. And getting a deal done is great. I've only once stood in the way of someone getting a deal done. And there was a very good reason. But doing it irresponsibly, it's a disaster later. Whether it's, typically it'd be the advice of a lawyer. A lawyer's advice is really cheap insurance, super cheap. The amount of times people have come back with problems, they have a joint venture agreement that's not even signed and now is worth nothing, that now they're spending, tens of thousands on negotiating instead of, a couple to get it done early on. Boy, it's staggering the amount of times that happens. So the information out there to do deals is good, with the caveat being, do them responsibly, make sure you are good stewards of other people's money. And if you do not have the experience, buy someone else's.
There you go. Well said. If you you haven't done a 10-unit deal, you can go get mentorship from a person that did a 100-unit deal, but that experience is probably going to cost you a lot more because they're giving you a lot more value for what they've accomplished. And
That's right.
if you just want to go get coaching or support from somebody who's only done a 10-unit deal, it's probably going to be a lot more affordable, but maybe applicable to what you're doing. But the message in all of this is finding information out there and which everybody's looking for. Navigating that information is really, really hard for people to do in this information overload that we're sort of in with the abundance of information online and artificial intelligence, and there's second brains that people are creating that think that they can go and learn it all themselves. But at the end of the day, there's nothing more valuable than finding someone who's actually been down the path that you're trying to go down, and then find a way to get direction from them or latch onto them for their experience to prevent it. How do you verify? How do you verify someone's got the sort of the experience? How does someone sort of navigate that with all of the information, all the marketability? What would you do when you're sort of sifting through it? What are some of the quick one or two questions that someone could start to ask someone to really uncover, is this the right person for me or not?
Well, the big one for me is show me the receipts. Like, you done a deal? Walk me through your last one. Where did you find it? Was it on market or off? Who helped you find that deal? Was it a commercial real estate agent? Have you worked with them for a long time? Who helped you get financing? Who financed the deal? How did the financing go? How close were the actual numbers on the acquisition to the pro forma? Did you accurately estimate land transfer tax? Did you accurately estimate closing costs? Did you accurately estimate what your insurance policy was going to ring you? And I want the receipts. I want you to show me your deal. And if you made mistakes, no problem. You learn something, right? You either win or learn. So that would be where I would start.
You just said something that anchors into my values, which is that the battle scars. It's one thing to be learning from people who have done a few things right, but the experience that I really want when I'm looking for someone that's guiding me is every single time I pass something by them, it's actually not to talk about what can be done right. It's like, what could go wrong here?
Yeah.
what's the downside? Like what pain have you been through before that is going to give me comfort in knowing that I'm not going to make that mistake in the future? Because that's really
Yeah.
what we're paying for, isn't it? Like in the coaching consulting, you're paying for what they
Okay.
know, but it's not just for the upside, it's for the downside part of it.
Yeah, and because mistakes are very expensive, and I'd so much rather I'm going to pay for a mistake. I'd so much rather give it to a coach than my own inexperience, which because that's how you build relationships. I mean, it's not necessarily that you're buying your friendships or you're buying your not, but you are buying knowledge, right? And that good relationship building helps later on.
Big
You
time.
you mentioned something actually a minute ago that I wanted to touch on. That's AI. AI does not have an errors and omissions insurance policy. And so, like our firm uses tons of AI and helps us with our systems, our processes. It helps us with our thinking. It helps us double check our work. It's helped us get more efficient on understanding things and reviewing things, but it gets double checked. And I got the license and the insurance policy to back it up. So I'm okay. But if you are using AI to help you figure things out that are really important, especially ChatGPT, which is like I'm almost not using now. It makes so many mistakes.
I couldn't agree more.
Yeah. So I loved ChatGPT when it first came out. And it is good for tons of things, like, coming up with ideas um
Having
and your
conversations.
problems and having a good conversation with, but it is terrible for drafting or accuracy when it
Yeah.
comes to facts. And for instance, I had a very tricky legal situation, and I have some legal AI that I used to fact check something that ChatGPT came up with, and ChatGPT was just completely wrong. It almost fabricated a legal answer. Not good. And
Not
that's just in my world, right? I didn't have the wherewithal to be able to go and understand that it's wrong, but a lot of people wouldn't. And so AI, great tool, but man, it's, you got to put a box around it and make sure that you're double checking, right? Now I tell, someone brings me a joint venture agreement and I, revise it or, put comments on it, et cetera. I tell them, run it through your AI. Find
Yeah.
out what I missed. I'd love to know.
Yeah, totally.
But that's how it's, that's how you use AI is double checking work. It's not to produce it.
Yeah, it's almost to, make what you know better and more streamlined,
Yeah.
but it's still not the thing that went and did the thing that you're trying to do.
It can't even do math. It struggles with simple math.
It's funny that you're saying that because I'm really diving deep into AI, especially over the last couple months and building
Yeah.
out everything. And there's so many tools available now, but it's almost now there's becoming too many tools available and people are getting
Yeah.
lost in the fog of AI and there's a bit of overwhelm there. But I can definitely anchor myself with what you're saying to how many mistakes and reworks are coming out of the work that I even know. Man, it's like it can be very, very helpful, but if you're relying on it for trying to navigate this complex world of, I'd rather just have somebody be like, okay, like forget all that stuff, take this step, take this step, take this step, and by the way, go check it.
I like the specialized tools. I find, the prompts that are behind them really do a better job of, say, you and I typing a prompt into ChatGPT. I would trust a specialized tool more than I would trust ChatGPT. I'm a proponent of AI. I use AI to help me do a better job faster, more efficiently. And I'll never tell someone to not use it, but I will absolutely caution them. It doesn't actually know anything. I mean, it knows everything, but it doesn't.
No, you can't be more correct there. And and
Yeah.
there's a lot more coming too. So what was the thing that was coming in my mind there? I was on to something I wanted to get there, but I'll come back to that when I remember it. So back to helping people navigate this world. You're helping on the legal side. You're an investor mindset with the legal background. I'm an experienced operator. I've done the things, and that's it's a very similar path where all the good people in this journey are all intended to do the same thing. Help
Yeah.
to collapse time, learn, protect your downside, get guidance from the people who have done it and be the shepherds and the stewards of, or the stewards, I should say, yeah, of getting people to their destination the quick as they can. So back to this world of guidance and coaching and consulting. There's people that want to learn how to just learn multifamily or sort of learn, okay, what does that next phase look like? And then there's other people that are like, I've got $1 million sitting on the sidelines and I want to go buy a 50 unit apartment building. Those are drastically different paths. And as you're trying to learn all of this information and learn what coach is available and learn which one's going to deliver, I'm going to ask you a question I know you're going to have a difficult time answering.
Okay.
But how much, instead of saying how much should someone else pay, how much, if you were looking for the education piece on sort of the introduction of getting the real information and getting clarity, versus someone who's like, they need holding the hand on going to take down a 50 to 100 unit deal. Just what is a gauge based on everything you've seen out there? But, and you don't know any of my coaching pricing, and this has nothing to do with, with what I'm offering, but you and the people and the viewers, what would be that sort of just that approximate range of expectation to actually pay someone that would truly deliver on those different levels of information?
Yeah.
What
Well, it's probably 5 figures at least. But I think where you need to start is backwards. You need to work backwards. If you are going to really tackle investing in real estate and you're looking, say, 5 years out, and you've got a net worth goal and a cash holdings goal, you got to work backwards, because coaching is an investment in and of itself. And every investment needs a return. And so you've got to understand, you got to work backwards to, okay, where am I at? Where do I want to be? And what is it going to take for me to earn the amount of income, exponentially through the years as I acquire more assets? What's it going to take? What do I need to spend now to jumpstart myself into those types of buildings and projects, and then into that level of profitability? And that's going to be a rudimentary or pretty rough calculation, because it really is so tough to tell. But to expect to get into coaching that's going to help you in the large commercial multifamily asset class, it's not, if you want to be there, it shouldn't actually be about the amount your coach is billing you. It's, what's the return on that? Because it is not an expense; it is an investment.
Yeah, it's a good way to put it. And I've never really positioned that with people, but it does tie into that end goal, which is kind of where I was getting that sort of range from. Someone stepping into it and thinking, I want to go do a 100 unit deal. Well, let's reverse calculate what that return, like what that result's going to look like, and then let's look at how much you figure ensuring that outcome is gonna be worth for you. Because if you want the 5K help to get a 500K return, there's a clear disconnect there in the value that you're going to be getting, right?
But at the same time, like, if you're someone who's sitting on 500,000 or $1 million and you just need the help, like, you had to do something right to get there.
Yeah.
So for me, that type of person isn't necessarily as concerned with the upfront number. They're more concerned with, where's this getting me?
That's right.
And if I can make that calculation pencil out, let's do it.
I like it for sure, because it gives a different perspective on what you're looking at. It's not about the number, it's about the result. Like, what is the outcome that you're looking to get? And if you're looking to just, get some information and see if it's for you, well, then being on the lower end of that, maybe even a 4-figure investment, is probably going to be great, as long as you're getting it from the right people to expose you to the right things. But when you start looking at trying to get a specific result out of it, I think you're bang on there. It's all relative. The bigger the return, the safer you want to be, the more the investment's going to be. And then it really comes down to the quality of the person that you're finding. So that's awesome. So I never asked you at the beginning, you have family, Shawn? Like, you have a wife and kids? What's going on at home?
I have a wife. I have a 4-legged kid who's right behind me, Susan, and but no 2-legged kid.
No 2-legged kids yet, or at all? Is it coming?
Yet.
Yeah, it's okay. Fantastic. Yeah. Right on, man. Well, as a father of 4 2-legged kids, I appreciate the time and space that you get to live with right now, and how and what that tells me is that you've got an abundance of time right now for your business, for your clients. You're very focused on what you're doing. It sounds like you've made some amazing moves in the real estate space early, and have the right head on your shoulders for what you're doing now. So what's the positioning, the repositioning of your company? Let's talk about that, because it's important for what people are getting themselves into and what you're looking for. But talk a little bit about that.
Well, our current law firm is called Cardinal Law, and it's named after the founder, my partner, Milena Cardinal. But we want to do something that is bigger than either of us. And so, from a pure business standpoint, this is a little under the hood. You, as a service provider, if the brand is you, then the brand has no value, because as soon as you're gone, so is the value. And so, a service business is really just a collection of systems and processes with a little bit of intellectual property built in, both legitimate IP and also just industry know-how. And so what we're doing is rebranding away from a brand that is associated with my partner and disassociated from both of us. And so, we brought in some help to help us really sort of think, okay, how can we communicate to the world what we do and who we are with a brand? And so we came up with Rook and Knight Commercial and Investor Law. And so what, we're obviously we're playing in the chess analogy, right? And so chess is
Yeah.
a game of measured strategy, in my view. Right? Very strategic. You got to be thinking ahead, but it's not chaos. It's not hockey or football. It's measured. It's subtle. And in respect to the pieces themselves, right? The rook is very straightforward. It moves two directions, straight up and down and side to side. For me, that's like your average everyday deal. If you're buying a 10-plex with TD financing and, you've done this 100 times, that's your rook type deal, right? And it's straightforward. It's calm. It gets the job done. And I would say that's what the rook does. It gets the job done.
Yeah. Matter
But
of
the knight moves all sorts of directions. It adapts. It finds a way to get something done, even if it's not in a straight line. And so, the chess analogy really fits for what we are as a law firm, because in this space, and as you know, having done a ton of deals, nothing ever really goes according to plan. There is always something. I've started telling clients that are buying multifamily, we'll have a signing appointment 2-3 days before closing, and I'll tell them, keep your phone charged. Because I guarantee you, the lender has forgot to check a box, or they forgot to ask for something, or they're going to come up with some new document that you need to sign. None of it's a problem, but it will come, and it's inevitable. And sure enough, every single time someone has forgot something, some underwriter found something, and we need this new document. Anyways, so preparing people for that in advance is very helpful, but nothing goes according to plan in our space. And so having the ability to adapt and checkmate is really important to us. We also, I'm relatively dressed up today in a golf shirt. I typically am a t-shirt and hoodie type of guy. We're sort of leaning into that gameplay piece as well.
Yeah.
We are the anti-Bay Street. There's a lot of really great people on Bay Street. I came from that world and I know a lot of them.
Yeah.
But for me, I want to be that guy you want to have a beer with, because that's to me, that's what a relationship looks like. Not necessarily the beer piece, but the relatable piece, right? Just because I'm a lawyer doesn't mean I'm any different than you or a client or anybody, really. And so we don't wear suits almost ever. And we are, I would say, laid back in approach, but serious in advocacy. And so that's sort of our driving piece, and having a brand that is about a game somewhat encapsulates that.
I love all of that, man. I love the analogy of the rook and the knight. That gives me a lot of perspective on the angle. I was going to ask if there's any correlation to you and your partner, like who's the rook and who's the knight, or if that's
We're
typically
both.
You're both.
Yeah.
That's good. Well, and I love that analogy, the straight line simplicity of certain things that are a matter of process. The rook's taking care of that. It knows what to do, and when it's a straight shot, it goes directly to it. There's no messing around. But having that knight in shining armor, which is always required, which is 100% how the commercial multifamily game goes. It's always be prepared, because that knight is going to move, and it's going to need to go to where it needs to go when it needs to go there. So
yeah,
I love that. And at the We Don't Wear Suits, it's our hidden tagline in everything that we do. If you can't tell, these are not online awards. I'm a welder by trade. I came from the trenches. If someone can't relate with me and who I am, it's just not the business I'm in. But I think there's a lot of a lot of things to be said. Everybody that I've done business with in the professional world is someone that I can absolutely sit down and have a beer with, or go play hockey with, or hang
Yeah.
out after the fact. And I think that speaks volumes to something that we haven't really touched on. But when people are building in this game, or finding a coach, like even relating to finding a coach, like if you've got a sense of connection with the people that you're doing business with, that's my first filter. My first filter is I don't really care how much you know yet. I care whether or not I can sit down and trust you and
Yeah.
invite you into my home and sit with my family. Because if I can't surround myself with people like that, it kind of takes away from the joy of what we're doing. So
Yeah.
it also doesn't take away from the fact that you still have to, trust that they're
Yeah.
capable of
You got
delivering.
to deliver. You still got to deliver, but if you're a robot, or someone that you can't converse with or have a good conversation with, them, what's the point?
Yeah, and it's just it's a character click. Like it's a
Mhm.
thing. Some people see the world in suits and ties and black and white, and the reality is they're going to connect better with people that see the world through
Yeah.
that lens as well. And that's great. Like that's a connection. And there's nothing wrong with that. Just like there's nothing wrong with two guys in t-shirts, lawyer and operator doing their thing, as long as they're executing and they're having a great time doing it. So I'm
Yeah.
glad you touched on that, because it makes me feel more connected with you already. And also just speaks to the fact that, there's the technical side of business. But then there's just the human side. And at the end of the day, my whole umbrella coaching program is based on the ultimate real estate lifestyle. And some people ask me what that means, but for me, it's not about the result of the money side of it. It's, what are we doing this all for? Like, what is the real purpose of
Right.
doing all of this stuff and making the money and building the relationships? And for me, it's not only the result of having the real estate assets be able to pay you to live the life that you want, but it's actually anchored in doing business with the people that I like doing business with.
Yeah.
That's the ultimate real estate lifestyle for me, is the full package. I love this business, and I just want to be doing it with great people that, enjoy the same things that I enjoy.
Yeah. The money's just a tool, right? It's not. You don't want it. You don't want it sitting in an account because it's going to lose money on inflation. You want it working, and some of that work should be doing what you want to do with your family and the people around you, and in the creation of that money, doing business with the people that you like doing business with.
Yeah. That's it.
One of the
It's
things we incorporated into our practice coming up on a year ago now is anytime we do a bigger deal, a multifamily deal, we host a dinner with the clients, with the whatever other professionals were involved. We're a virtual law firm, and so that human connection really is lost, which is fine practically, and certainly legally is fine. But having that, breaking bread and clinking glasses to celebrate the work that goes into acquiring a property or selling a property, if you're playing Monopoly and trading up to something bigger, or refinancing into stable MLI select financing after having a bridge and a private to close. That's a lot of work for that investor. And it's also a lot of work for the people around them. So we like to host those dinners, and they can be reserved and fun, or they can get wild. I mean, we have a good time either way. But that's something that I've really enjoyed introducing, because it just creates that connection that you just can't really get through the screen.
No, you're absolutely right. And a big piece of what people forget this is all about, right? It's all about the relationships, and the result is, it's spending more time with people that you love. So why not do that when you're working with them? It
Yeah.
warms my heart to hear that side of it for you and for the people that you work with, because it's glazed over, maybe taken a little bit for granted, how much work we actually go through and how much stress there is in and workload there is in this process. And if you're not taking the time to enjoy it, man, am I ever guilty of that over the last 10 years of grinding in business and head down, ass up. And it's a big reason that, I've changed my perspective of
Yeah.
how I spend my time with my family, how intentional I am with all of that stuff. So it's awesome. And it sounds like anybody that works with you is getting that indirect and direct value from the service that you're providing. So it's phenomenal to hear that, man. And good on you. Good on you. And
Cool.
congratulations for the journey you've taken and where you're at. It's only a matter of time, sounds like a matter of time before we'll wind up doing some business together, and we could continue talking for a long time. I can tell about a lot of different subjects and matters, and I look forward to more of those conversations. But for now, I think we're kind of at the end of our time. I got a ton of value out of this and learning more about you and your business. What's the best way for people to get a hold of you to come and start their commercial real estate investing journey?
Yeah, well, you can find me on all of the socials, Instagram and Facebook. If you search me at SP Quigg or at the REI Lawyer, you'll find me. You can also reach me by email, Shawn at rookandknight.com.
Beautiful, man. And we will have some of those links and some of the info, so it's going to be easy for people to do. But without further ado, man, I want to thank you very, very much for taking the time to come and join me today and share a lot of this valuable information with the people that are watching. And I can tell that we're very, very aligned on the integrity side of it and helping people and guide them to make the right decisions with their time and their money to get to the end result, which is living the ultimate real estate lifestyle in a way that protects your downside and enjoys the ride a little bit along the way. So thank you, Shawn, very much. I really, really appreciate you coming out, and we'll be in touch soon.
Gee, thanks so much for having me on, dude.
All right, you're very welcome. And everybody, we'll see you on the next episode. Bye for now.